Welcome to Breaking News to Trading Moves.
Today, we're looking at a key development in aerospace, specifically a major acquisition attempt by Boeing and the regulatory steps involved.
That's right. We're focusing on Boeing's proposed purchase of Spirit AeroSystems, its largest supplier, and what the Conditional EU approval means.
The backdrop here is, well, it's been a tough period for aircraft quality and getting planes delivered on time, so this deal is really being watched closely.
Okay, so the main news item, the EU looks set to grant conditional antitrust approval for Boeing's, $4.7 billion offer for Spirit AeroSystems.
Correct. And this comes after the UK already gave its okay.
Yeah.
So the big regulatory pieces are sort of falling into place now.
But there's a catch, a condition.
Yes, there is. And it's important. The approval hinges on Boeing selling off, divesting Spirit's assets that handle work for Airbus. Basically, the parts of Spirit that build things for Boeing's main competitor.
It can't absorb that part.
No. Boeing gets the Boeing-focused parts of Spirit, but not the Airbus side.
And the whole point for Boeing here, it seems, is about regaining control, right? Bringing critical fuselage work back under its own roof.
Exactly. It's a move to, well, stabilize their supply chain, especially for the big programs, the 737 and the 787, which have seen a lot of disruption.
It feels like a reversal of that big outsourcing trend we saw years ago.
It really is. They're aiming for tighter quality control, less rework, hopefully, which, has been causing delays and headaches, getting things more predictable.
Okay, that sets the stage nicely. So let's look at who potentially benefits if this deal gets finalized with these conditions. Who are the winners here?
Well, the most obvious winners are the companies involved, wouldn't you say?
Yeah, Boeing, ticker BA, and Spirit AeroSystems itself, SPR.
Right. For Boeing BA, it's about directly managing that crucial manufacturing, making the 737 fuselage key 787 sections. The idea is fewer problems coming from outside.
Lower costs internally from fixing issues, maybe?
That's the expectation. And for Spirit, SPR, well, this deal going through means clarity, an end to the uncertainty around their future, becoming part of a much larger operation. Getting these regulatory approvals is a big step for both.
Makes sense. Okay, so beyond the two main players, who else is potentially looking at a positive outcome here?
The analysis points to a second group, the Tier 1 and material suppliers, companies further up the chain.
Okay, explain that. Why does Boeing bringing Spirit in-house help, say, a company that makes the metal or composites that Spirit uses?
It boils down to predictability. Aerospace runs on long timelines. Suppliers need stable demand to plan effectively. If Boeing's production is smoother, more consistent,
which integration with Spirit aims to achieve.
Exactly. Then these suppliers can expect more reliable order volumes, less of the stop-start uncertainty that messes up their own production schedules and capacity planning.
So we're talking about companies like Helmet Aerospace, that's HWM. They do fasteners, forgings, things like that.
Yes, HWM. And also Hexcel, ticker HXL, a big name in composites. Their operations become much more efficient if they can count on steady demand tied to those 737 and 787 build rates. Volatility is just costly for everyone in the chain.
Okay, so BA, SPR, HWM, HXL, that covers the supply side. What about the customer side, the airlines waiting for these planes?
Yes. Group 3, the U.S. airlines, they're definitely watching this.
Because they need those planes, plain and simple. Delayed deliveries hurt their growth plans, their costs.
Absolutely. Airlines run tight operations. Getting new fuel-efficient 737s and 787s on time is critical for replacing older jets and managing their operating costs, their unit costs. Delays mean flying older, thirstier planes longer.
And the focus here is on major carriers like Southwest, LUV, and United UAL. They have huge orders outstanding, don't they?
They do. Massive backlogs. So for them, anything that leads to a smoother, more dependable delivery schedule from Boeing is, well, it's very welcome news. It directly impacts their financial planning and competitiveness.
Stability at Boeing helps their bottom line.
Pretty much, yeah. Predictable deliveries allow for predictable growth.
Okay, so we've seen the potential winners. Now, let's flip that coin. When a giant like Boeing integrates such a large supplier, it inevitably creates pressure points elsewhere. Who might face challenges from this?
Right. Let's talk about the potential losers, or at least those facing some headwinds. The first group would be the independent aerostructure competitors.
Other companies that build similar large aircraft parts, but aren't owned by Boeing or Airbus.
Exactly. Think companies making things like flight control surfaces, engine pylons, maybe other fuselage sections. They compete for work packages from the big manufacturers.
So if Boeing is now making more of its own structures internally via Spirit,
Then these independent players might find it harder to win future Boeing contracts. Boeing now has this large, integrated internal capability. It might make them more competitive on cost when bidding out work.
potentially tougher negotiations even on existing work, too.
Could be. It might squeeze margins for the independents. The material mentions companies like Triumph Group, TGI, and Ducommun, DCO, as examples of firms potentially facing this kind of pressure.
Their competitive landscape just got a bit tougher, especially for Boeing-related business.
Definitely something they'll need to navigate. Maybe diversify, maybe sharpen their pencils on pricing.
Okay, that's the direct competitors. What's the next group feeling the squeeze?
Loser group 2. We're looking at smaller suppliers, specifically those heavily exposed to Boeing.
This sounds like a bargaining power issue.
That's precisely it. Once Boeing fully integrates Spirit, the combined entity is just bigger. It has more purchasing power, it can demand better pricing, more standardization from its sub-tier suppliers.
So the smaller guys who make specialized parts or offer specific services might find Boeing driving a harder bargain.
Very likely. If you're a smaller company providing, say, specific electronic components or specialized machining, it gets harder to push back on pricing pressure from your biggest customer.
Companies like Astronics, ATRO, or Barnes Group B are mentioned here.
Yes. They might supply critical niche parts. But if Boeing pushes for cost reductions, leveraging its new scale, these suppliers might have little choice but to accept lower margins to keep the business.
Consolidation at the top often means pressure down the chain.
It's a common dynamic, yes.
Yes.
Benefits the buyer, challenges the smaller seller.
All right, now for the third group identified as potentially facing pressure. This one seems a bit less obvious at first glance. The aftermarket companies.
Ah, yes, the MRO, maintenance, repair, and overhaul-focused businesses. It does seem counterintuitive, doesn't it?
Yeah, why would Boeing getting better at building planes potentially hurt the companies that fix them?
Well, think about how high-margin aftermarket services often work. They thrive, to some extent, on unscheduled maintenance, on unexpected breakdowns. When a part fails and a plane is grounded, airlines need it fixed now, and they'll pay a premium for the parts and service.
Okay. So if Boeing, through integrating Spirit and tightening quality control, actually builds more reliable planes with fewer initial faults,
Then you potentially have fewer of those urgent, unscheduled, high-margin repair events happening, especially early in an aircraft's life. The bread and butter for some of these aftermarket specialists is that premium pricing driven by urgency.
less disruption means less opportunity for premium pricing.
That's the potential dynamic. If parts are more reliable coming off the line, companies like TransDigm, TDG, or IICO, HEI, major players known for strong aftermarket pricing, might see less demand for those highly profitable, quick turnaround repairs.
So improved quality upstream could, somewhat paradoxically, put pressure on downstream service margins.
It could. Plus, if Boeing is delivering a higher quality product overall, they might also start to push for lower long-term maintenance costs as part of the aircraft's value proposition, putting further pressure on the aftermarket pricing structure.
Fascinating. Okay, so let's just quickly recap the main points we've covered based on the analysis.
Sure. We started with the EU's conditional thumbs up for the Boeing-Spirit deal, the key condition being that Boeing has to sell off the Spirit assets doing work for Airbus.
Right. And that approval clears a path for potential winners. Boeing, BA, and Spirit, SPR, obviously. Then the suppliers who benefit from stability like Howmet, HWM, and Hexcel, HXL.
And don't forget the airline customers counting on those deliveries like Southwest, LUV, and United, UAL.
Then on the other side, potential pressure points for independent competitors like Triumph Group, TGI, and Ducommun, DCO.
And for smaller suppliers facing increased bargaining power from Boeing, like Astronics, ATRO, and Barnes Group B.
And finally, that somewhat counterintuitive pressure on aftermarket players like TransDigm, TDG, and Iflito, HEI, if quality improvements reduce lucrative unscheduled repairs.
Yeah, it seems the integration aims to solve a core problem for Boeing predictability and quality, but that solution changes the dynamics for various other players in the ecosystem.
A good overview of the potential impacts. Now, just a reminder for everyone listening,
Yes, the information discussed here reflects the opinions of the author of the material we reviewed.
it's not financial advice, and it's certainly not a recommendation to buy or sell any specific stock or security. Please do your own research.
Thank you for tuning in to Breaking News to Trading Moves.